Okay, what's happening everyone? Welcome back to the setup here. My name is Lorenzo. I am the co-founder of the Limitless Trading Academy. I'm here for you today to talk about the weekly open, okay? And everything that you can experience this coming week. Keep in mind, guys, and this is important, that this might be the last week of the year where we can extract some profits from the market here, okay? So just to clarify, when going into the schedule today, tomorrow we have the CPI coming for the euro. The building permits are coming along here. We have still some really nice dollar news all the way up until Thursday. Friday is the last news for the GBP, and that's it, because next week it's going to be a full-on Christmas season here for around 1 or 2 weeks, and then after that, at the beginning of January, usually it's not really that exciting either. So let's make this our week to make some money together, okay? And therefore, let's open up strong with all the particular setups that I'm going to talk about in a second here. But before we start, let's hype the chat a little bit up here. If you are just tuning in right now, we have 142 people watching. Smash up that like button, okay? And if you're new, then subscribe, hit the notification bell. It's going to be awesome. We're going to have another stream in an hour from now. We're going to trade some crypto on the second channel as well in a second here. But yeah, make sure you smash up that like button here. Who we have in the building? Ivy, good afternoon. Ron, what's happening, brother, man? Good evening, bro. How are you? CS Media. We are the V3 Army. Yes, sir. Thank you so much. Big 3 Imran. Amazing. Yeah, it was a great session yesterday. Great weekly opening analysis session in the V3. Hope you learned something from it. We're going to use this a lot here. We're going to talk about this also in a second here. What else do we have? Bennett. Good to see you, man. Abi. Love it. Okay. Incredible, guys. Let's dive into the chart, shall we? Okay. We talked about this in our session in our private group here, regardless, for the fam right now on YouTube as well. Let's talk about all the confidence that we currently are seeing for the dollar, okay? What we're doing here is we're going from macro to micro, and especially when the market opens up, all right? We try to always go back to the micros eventually for our entries, but it's very tempting to start at the lower time frames just because you're so used to playing around on that playing field here. But if the market opens up, you have to always understand that there is a new weekly candle that's giving you a bunch of information, okay? And that information is super important for us to make trading decisions, okay? From that moment onwards, we can go from the macro, we can go to the micro, and we can start making these type of entry decisions here. So starting out understanding what the macro is doing due to the fact that the new weekly candle is opening up is extremely powerful, okay? So how can we implement that? Well, number one, we have the dollar index, okay? A basket of goods, measuring the dollar strength against other currencies, in this case, the dollar index, all right? What do we see here? Very simple, guys. We keep it very simple, very straightforward. We have been holding onto this beautiful, beautiful trend here. Hope you can see it right now. It's a little bit small. I'll make it a little bit bigger for you. But we have been holding at this trend here, okay? That's number one. Bounce 1, right here. Bounce 2, bounce 3. Couldn't be more easier. Couldn't be more straightforward, right? Confluence number 1. That's not it though, okay? Now we have to zoom in to the range that we're currently at. And if you look at this particular range, you can see clearly that right here at this particular level, we have this particular low right there, right? So we have this low right here, we have this high right here, okay? This low created a lower low, now we created a higher high, now we're pulling back into that low that caused to break structure right here, right here, right here. So this is an important low. We measured and we came back towards that level. Now, we came back towards an important zone because we have to draw our Fibonacci from swing low to swing high, and we will come back towards the 70.5, okay? We have the 50, the 618, the 70.5, the 79, the 88. Usually whatever runs between the 50 and the 79 is what we call a premium zone, right? You want to get your entries roughly here, you want to sell roughly here in order to benefit from the risk to reward in that manner. So in this case, a trend line, we're bouncing up here and we're coming up from the 70.5. So we have a lot of confluences aligning around the dollar here, okay? So the dollar is at support. Now what's happening is important here because it's Monday, okay? So whatever tends to happen on a Monday is going to be key. But we also know that Monday is usually the day where the majority of manipulation occurs, right? Where people get led into the wrong direction because the market is absolutely opening up. And for that particular reason, you know, what tends to happen is that they're accumulating positions, liquidity, to then Tuesday, Wednesday, Thursday, start flipping, start going to the other way, right? In this case right now, we open bearish, all right? So we had a daily candle opening bearish right now, right here. So the way we're looking at it now is the following, okay? We had a lower low, a lower high, and a lower low, but we opened and we closed right at resistance. So if we have the macro trend going up, still looking at, let's say, a bullish sentiment here, internal market structure is showing us that we're now facing resistance, okay? Now Monday is usually the day where the manipulation happens, so we open bearish, but let's say that we start flipping this candle bullish right now, okay? And this is the only thing that I'm looking for, is this candle going from red to green, coming bullish. I do believe that based upon that move here, we can start coming up significantly towards that high, okay? Look at that gap that we have been building up here, right in that center, right in that range. This is that gap that we're talking about, roughly between the 102.85 and the 103.4, okay? That's the gap that we need to fill. So if we start flipping that candle green, bullish, we might be leading into continuation. So that means that the dollar pairs that are connected to the dollar index could increase in strength, okay? So what you need to do, and what we're doing here also in our academy here a lot now these days, is we're using baskets. We're using currency baskets to understand what are the stronger currencies, what are the weaker currencies. The same thing for gold with the treasuries. We're gonna get there in a second here. But what's important to mention there is that candle flip scenario, looking then at which currencies are performing the weakest against the dollar, okay? So for example, when looking at the euro at this particular moment, what do we see here for the euro? Well, the euro right now is looking extremely weak. We have been coming down already. We came up, we're now below resistance. We have a very weak bottom opening wick here. So is the weekly candle, the daily candle, they're right now the same. It's the same candle. We just opened up here. So what are we seeing? We're seeing a wick, bottom wick here for the euro right here, based upon strong resistance as well here, okay? That's one layer, that's one currency. I'm gonna get there in a second here because I'm gonna go into the euro against the US dollar. The other one is the Japanese yen, okay? We talked about this Friday. We said, okay, what we wanted to see was we want to see a closure above. If we do not see a closure above, we might be looking for a pullback. Why? Because what we want to see is particularly a higher low scenario. So that means a lower low, a higher high, a higher low, followed by a breakout, okay? However, that higher low is not created yet. So there is still a chance that we're going to do this due to the fact that we're facing a lot of resistance here on the weekly time frame for the yen. So that means the yen is in resistance and the dollar is in support. The dollar is in demand, the yen is in supply right here, okay? So what are we looking for automatically at that particular moment? When putting that all together here, that's the following chart, okay? And that is the dollar against the yen. Now look at the dollar against the yen here and look here on the daily time frame for the dollar against the yen, okay? We're start seeing the same exact thing here, okay? Hope that makes sense. We're gonna zoom in a second here. But this is super key to get, okay? Because I truly want you guys to gain that perspective, okay? Especially in our community in Discord, we talk about the macro perspectives a lot, understanding correlations, because that's the base foundation of your trading, because your entry strategy is what comes after. So if you are an ICT trader or an SMC trader or a horizontal support and resistance trader or a trendline trader, whatever the case may be, the macro perspective stays the same, because you want to understand which currency is strong, you want to understand which currency is weak, and you want to take advantage of the momentum that's created due to the fact that there is a big contrast, a big paradox between strong and weak currencies out there, okay? So in this case, we know that the yen is in resistance, right here. Dollar is in support, okay? Dollar yen still creating the upsloping daily trend line. Fantastic, okay? We have seen a reaction here. Now combine this with some horizontal support as well, same as what we did before. That was creating a strong lower low followed by a higher high, okay? So when zooming in again, guys, we're taking this towards this particular range right now. Very, very similar, right? We have a low, we have a higher high. We're now having potentially higher low in premium areas, okay? Now we're seeing an initial breakout here. So let's take this to the lower time frames right here, okay? Starting at the hourly, we're gonna go down towards the 30-minute, maybe the 15-minute right here. It doesn't really matter, okay? What do we see now, all right? We have been looking at this particularly easy here. So what I think could happen, okay, is the following. What I wanna see is the following right here. I wanna see a move towards the downside first. I wanna see one more move towards the downside. If we truly start flipping bullish for the dollar, we might be already looking for long entries for the dollar against the yen here. But at this particular moment, what we're seeing here is a very clean range, okay? So we have that consolidation now. We have that expansion, okay? Now we have the information we need. We have now a particular range that we can leverage, that we can use here. So let's draw the fixed range volume profile. And now we have this particular level that I'm interested in, okay? Why is that? Well, number one, what we can see here on the lower time frame is the following, okay? We have this particular range, consolidation, that expansion. Now we have a bunch of sell side liquidity that's resting below that, okay? Now we can talk about our entry strategies here. It depends on your strategy. This is what I personally like to use a lot. So what I see now is that rest liquidity right here, okay? That is there below. If we take this out right here, okay, and we come back towards the point of control, we come back to that low. That low was the catalyst of that initial move. I think this is the best possible entry for long setups. I think you have the highest risk reward when coming back towards the 141.674. If we come back down here, you come back up, I think we have the best possible setup for the dollar against the yen right here, okay? That's what we're looking for this particular trading setup in regards to the dollar yen. If you start pulling back towards the value area high, which will be at 142.2, then we might be seeing a bounce here. But because of the sell side, I do believe that if we do not take this out here, that I'd rather wait for price to come back down here. So I know at least that the manipulation has been done before we enter a position, okay? Now another one is the euro, and the euro is still looking very, very weak. But at this particular moment, you can see on the daily time frame as well here, and let me zoom in real quick, that look at how we opened to, okay? This is the daily time frame for the euro against the US dollar. So very important here. We're seeing this high. We're seeing this high right now. We got rejected here. Look at how we're opening up. The dollar seems to be bearish right now. Therefore, we're pushing price a little bit upwards here. I do think we're going to flip this candle, okay? I think we're going to come down, and I hope that we flip this. And if we do flip this, then we have an amazing short opportunity for the Euro USD with a relatively safe trade opportunity as well, okay? So if the next candle comes down and we start breaking the 108 point, and I need to see it here, the 108.94, then I think we're going to make a 100 pip move to the downside. Coming up, coming down to fill up that gap here, due to the fact that I can guarantee you that if that happens, the dollar will break out of this zone and potentially shoot towards the upside based upon all these macro confluence that we just gathered, okay? So the Euro USD, if we flip bearish, particular 100 pip move down to the downside. That's what I'm looking for the Euro USD. Now let's go to the next one, because this is where we lead into gold as well here, okay? We saw a really nice move for gold. Obviously during the news, the FOMC meeting, we saw a fantastic expansion here based upon the higher time frame. We talked about why the 1975 was such a key level. Okay, if you watch the setup here, that was exactly where we took a trade from long. So we eventually start still seeing a really nice bounce to the upside here. But what's important to mention now is the next possible, setup for gold, because what people tend to forget is the correlation with the treasuries. Okay, and what tends to happen right now is the confidence in the stock market is getting less and less and less. The volatility might be increasing soon. However, imagine you are a big investor, okay? And you have a bunch of money available right now, and you can literally decide where to deploy your money. Would you rather put it at the all-time highs of the stock market, right? Or you want to put it into a declining, for example, treasury right now, coming down right here? Or did you hear a lot of cool stuff about particular commodity sector because it's kind of seen as a safe haven, while there is also so much political uncertainty at this particular moment going on in the world, geopolitical situations, you name it, right? So at this particular moment, what I think is happening here is that we're seeing a huge transfer of wealth coming, particularly from the treasury market that was truly blown out of proportion back into the commodity sector, okay? Gold is one of these commodities in that sector. So for this particular reason, I think that we have to pay very close attention to the structure, the candle structure of the 10-year yield in order for us to make more informed and better decisions for the gold chart, okay? So what does the 10-year yield has done right now at this particular moment? Well, the moment we start smashing through this particular area of support here, because we had some support here, right? We had support, resistance, resistance, support. Right now coming back, we broke through it, we closed below it, okay? So this is important. This particular move here, this 3 daily candle that you see here that smashed through that support there, was the catalyst for gold to make that massive move to the upside, okay? Based upon the market structure on the higher time frame for gold, we also saw a nice confirmation. So that was another layer. Of course, we came down, we pulled back, we tapped into this last low, and so on and so on. That was right here at 1976, but we made that move to the upside. We took out that rest liquidity that we had been building at around the 2040, and now we're pulling back. So what tends to happen right now is that people already start becoming, very, very bullish right here, because we're now at support at 2016, and I think this is where a lot of people will start entering their long positions right now. However, I just wanted to clarify that if you go back to the daily chart now on the treasuries, okay? So imagine this, all right? The 10-year yield goes down and gold goes up, okay? So if the 10-year yield goes up, gold can start pushing back down, okay? So are we now at a stage where we're comfortable enough for the 10-year yield to see further downside potential? That's the question I ask myself here. And when I see the following, okay, and that's important to mention, is this particular candle structure. So we have to zoom in here for the 10-year yield. And then we're going to go back to the gold chart right here. And that's how I'm going to take a trade in a second here. Not in a second particularly, but when we have that confirmation. So in this case, we had the open, okay? This is the daily open, this is the Friday closure, okay? The weekly candle, same scenario right here, but look at the daily. And look at how we have created that local support now for the 10-year yield, okay? What we want to see, and this is super key, in my opinion, before we start looking for long setup for gold here, is when we break the 3.886%, I think we can make another leg to the downside here for the 10-year yield. Therefore, automatically gold can start holding above where we are right now and therefore pushing further to the upside. However, what I think is a more realistic approach is the following, okay? And that is this particular move back towards the upside here. So look at what happened here. We closed that major move to the downside. We saw that major resistance turning, we saw the major support turning now into resistance right here. So I want to see a move for the treasuries pushing us up back towards the highs, tapping into this order block or area of resistance right now. It's a combination of both, and then seeing a rejection, okay? So that means that if the 10-year yield is right there at the 4.1%, then I want to see where gold is at, okay? And based upon that information, I'm going to look for long entries until my trade gets invalidated if we start breaking these lows. So for example, there are a couple of different levels that I'm looking for right now, okay? Let's talk about the Fibonacci one more time. We have this swing low and we have this swing high for gold right here. Key levels were, okay, the 1967 or 76, the 618 Fibonacci, which is roughly around the 1992, and then we have one sitting around the 2010, okay? So the 2010, super key level, also on the higher time frame. You can see it right here if you go on the daily. The 2010 is a very important level to look at, okay? Because you're seeing right at this particular high, you have this high, you have that resistance here. So if you come back to the 2010, that might be perfectly my particular entry point here. If the treasuries, that's important to mention, will give me that confirmation. Because if the treasuries are still looking at further upside right here, and we're not breaking this particular low, then the only thing that I'm going to wait for is for gold to come back down, okay? And that means that we're going to come back down towards this particular range of price action, because we have been utilizing this range to expand to the upside to take out the highs here. So this was the catalyst for gold to push us further up, to break structure, to take out that liquidity that was built up here, leaving us with that gap below here. So that gap is still there, and therefore a retest of that gap could lead in towards practically what we're talking about always, that consolidation, expansion, and that retracement, then that continuation to the upside. Then you create a W formation, then you establish enough orders to push us through new all-time highs. This is what I'm thinking about, the massive gap above here back towards the 2070 level. I think that's a super realistic level to eventually start looking at right here. But this is important to mention, is that are we already ready for that pullback right here, okay? I know there are a lot of gold traders out there that want to trade gold every single day. What I want to do right now, I want to act as a sniper. I want to wait for these perfect confluences coming together. Then I want to take a massive position. That's what I'm looking for. So in this case right here, coming back towards that zone is likely here. So if we're not bouncing off of the 2010, okay, this is where I'm willing to place a position, a long position right here. If we start breaking this one, and I get stopped out for whatever reason possible, I'm going to go to the next level, which will be roughly at around the 1992 here. And the reason why it's the 1992 is the following reason, okay? It's because of the value area high of this particular range, because this is also providing us with that information. And there are, again, you know, multiple confluences coming together right here at the 1991, the 1992, roughly around that level here. That's where I would place my second trading position right now, okay? So very important, that's scenario number one. If you do, however, and this is important to mention, if you do, however, break this low, it's a different story, because then we have particularly been holding here, okay? Then I'm looking at internal market structure for gold, and then I'm gonna go for a little bit of a riskier play on the lower time frame. Then I might interested in like just to look for further, you know, continuation to the upside right here, okay? At this particular moment, you could see now that gold is trying to push and break through this high here. But what needs to happen is that we simply then break this particular high, then pull back to see if there is enough expansion to look for a retracement, to look for a continuation, also creating the W formation, then filling up that whole gap, taking profit at around 2033, okay? So that's gold. Overall, I think there is a lot of potential for gold here, but the treasuries are right now absolutely key, especially because we're heading in towards the yearly closure. And whenever you head into yearly closure, these numbers that you see now on your screen in regards to the treasuries are going to be extremely important for the overall macro economy, for all the people that are involved in the stock market, and you name it. So pay very close attention to this chart. We might see some volatility happening right here. Okay, so with that said, let's go to the next one here, and that is the New Zealand dollar, okay? So what we have here is a basket that we have been creating right there, okay? And it may sound a little bit weird when you look at it right here, but this is, and we're gonna talk about it in a second here, the New Zealand dollar, US dollar, the New Zealand dollar, euro, Canadian dollar, British pound, Japanese yen, Australian dollar, the Swiss franc, all combined, okay? Divided by 6. So what we have created in essence here is a custom basket of, like you could say, a custom trading view chart, where we could analyze right now how strong the New Zealand dollar is performing. And the New Zealand dollar is actually, at this particular moment, one of the best performers in the market right here, okay? So if you are a Forex trader, you might gonna like this a lot. Why? Because you have been constantly creating higher highs, higher lows, higher highs, higher lows. And right now with the weekly open, we're seeing that we're nice and steady holding above this particular area of the month. And we're might looking at further upside potential. If you take this to the 4-hour chart here, look how bullish we're looking right now for the New Zealand dollar. Very, very clean. It's actually a really nice breakout as well right here. The New Zealand dollar is showing a lot of, you know, upside potential right here. So again, when combining this with another basket, which is the British pound, we're actually looking much weaker, okay? Look at the key differences we saw on the British pound against the New Zealand dollar. The New Zealand dollar was much stronger than the British pound is right here on this chart right here, okay? We saw a massive expansion to the upside. We then saw a massive breakdown towards the downside right here. And now we're pulling back up to the 50%. We were building up that liquidity right there. And now we're taking out, coming back towards the lows right here at 1.50 from the basket itself, the British pound basket as well. So the 50% was a rejection. And now we're coming down here. So again, if the New Zealand dollar is strong, okay, and we're looking good, and we're looking like we want to create some momentum to the upside, and the British pound looks weak based upon this chart, then there is only one chart that we're looking for, okay? And that is the British pound against the New Zealand dollar. And look at where we're currently at. And I think this is super key for us to understand, and I think this could be resulting into a big play this week, is the following, okay? Resistance, support, support, right now heading at support right here once again. However, having still a massive gap right at this particular range here. So we have a massive gap sitting between the 1.99 and the 2.15, okay? Somewhat between that range right here. That's what we're currently looking at. So we're talking a 300 pip move here. It's serious, it's a serious number, okay? So if we start closing below that particular low right here in this daily candle or tomorrow or whatever, and we start opening up tomorrow and we come up and we flip our candle bearish and we break structure right here, we break that support, I think we can continue our journey. I think the New Zealand dollar is ready for more upside potential, and I think the British pound is not where it should be right now, looking particularly weak. Could result you into a 200 plus move or pip move here for the British pound against the New Zealand dollar. So even if you're trading Forex, you know, you don't always have to trade gold for the, you know, the pip averages, okay? Based upon the macros right here, especially because it's Monday, you will find really good opportunities if you are patient here. So very, very clean setup, overall strong support on all factors here, strong New Zealand dollar, weak British pound, okay? Now let's quickly dive into the Nasdaq, because we have been looking at the weekly here. At the same time, guys, make sure you smash up that like button here. Absolutely amazing. If you're new, subscribe to the channel. It's gonna be incredible. I see Maria in the chat, David, Aditya, Matthias. Nice, great stuff here. Okay, beautiful. So Nasdaq, okay, Nasdaq broke highs, crazy highs here right now. We're at the 60,656. Crazy stuff. Okay, we closed above it also. We closed the weekly candle above it as well. So extremely bullish for the Nasdaq. Okay, does it mean we have to short the Nasdaq right now? Not yet. And I'll show you why in a second here. Because if you go to the let's start out with the 1 hour time frame. I think that's the better chart here to look at right now. Okay, so what happened was the following. We aggressively shoot up, right? So people tend to be extremely bullish. Then there is so much sell side liquidity below, rest side liquidity as well here, that we had to come down to fill up that gap and to come back into this previous price action, this previous range right here. Okay, now that range was the catalyst for one more move to the upside. Okay, but what's important here to mention is that this has been nothing more than just a liquidity swipe to the upside right now. We have not seen a single body closure above that previous high. So if you look here, 16,691.5, not a single body closure above this high right here, okay? So what happened was we came down, we aggressively shoot up, but what you want to see is a higher high, okay? We're looking at higher highs, higher lows if we're looking for continuation. In this case, this was just, in my opinion, a simple, swipe of the previous highs here, particularly taking out the people that were shorting from the top but not taking profits again. So now we have liquidated the longs, now we have liquidated the shorts. So now we can start thinking about a new formation, okay? And that formation is not there yet. That formation still needs to come. So what we're waiting for is better structure, better price action. So if you feel obligated to trade the Nasdaq right now, be patient or be careful, because this has been a liquidity swipe on both ends. Now we're somewhat ranging in the middle. We're somewhat in the middle of nowhere. So what we need to do is we need to either break up and create a strong body closure above this high, followed by some sort of pullback to start looking at some nice trading opportunities for further continuation up, or we need to start breaking above the low that created that swipe of liquidity. And that's at this particular level right here. That's at the 16,565. So now you're somewhat in that no trading range. Okay, so if you're now here, I suggest not to trade it. If you're out of this range, then it gets interesting. Okay, so higher high, higher low scenario, or a lower low, lower high scenario, depending on what we're currently looking at. So overall, very important stuff for the Nasdaq, but we're currently somewhat in a no trading range. And again, you just broke above major weekly resistance. It is very bullish due to that closure, but be careful, because this is where many people get trapped into the markets on a day-to-day basis here. So I just want to warn you, unless we have better structure, and I think that should be developing during the next coming days ahead of us here. Okay, another chart here is Bitcoin. So we did our Bitcoin stream here, and we talked about the majority of gaps that we had and liquidity that took place here. So for example, give you perspective, there is around the 40.3, so the 40.3K, there is roughly around $800 million of long liquidations resting, okay? So if we get to the 40,300, $800 million of long positions will be particularly liquidated right here on the spot, okay? At the same time, this is what we call also the CME gap. We have a CME gap right here because the Bitcoin futures chart closes on a Friday and opens back on a Monday, whereas Bitcoin, of course, the overall market goes on 24/7, right? So sometimes this chart is not working due to the fact that we have, the futures, the CME. So what tends to happen is that we create a gap, and that gap can work and attract as a magnet. So what we were waiting for was price to pull down, okay? So very clean structure for Bitcoin is the following right here. We had a nice range, we created an expansion, a retracement, we saw that rejection. Now we're looking at lower lows here. I think we're heading towards that gap. And I think from that moment, we can start particularly, potentially moving further up here. But once again, we're gonna dive very deep into that Bitcoin analysis here in a second here. We're gonna be live and regardless on our second channel. So if you are interested in crypto and trading crypto, then this might be your opportunity. It's gonna get mad next year. You wanna be fully prepared. This is your moment, okay? Make it happen, do it right now. Links in the description as well in the chat. Make sure you smash up the like button already. Drop some fire. I would highly appreciate that, okay? So, gonna be a good one here in an hour from now. I'm gonna be live on the second channel. And guys, thank you so much for being here as well. At the setup right here, the Limitless V3 has been on fire. I'm gonna be there. I'm gonna give a lot of more private events here, as well as my daily setups are right now shared also with more context, with video explanation of every single setup I take personally right now. Just to give you more clarification, let's dive into the new year. Let's make this last week count. I see you in the V3. It's going to be an absolute pleasure to host you tomorrow once again. And I wish you a fantastic day here. Keep crushing it, guys, and smash up that like button. See you in the next stream. And I'll see you tomorrow at the setup. Ciao, ciao.